Hello and welcome back to another opening range mastery training video for opening range success formula and day trading with hot scans. In this video I want to talk about the big red bar or the big candle that looks so heavy on the markets, and in fact it often is a very heavy indication, and the example of this is this big red candle right here. We're looking at the diamonds daily chart. And in my prior videos, I've talked about support and resistance. I've talked about expansion phases and contraction phases or periods. And so this fits right in with that as an adjunct. And it also, I think, for many traders, will be something that's a little counterintuitive. I know for me as a trader initially it was counterintuitive, but we're going to see two examples of this today, one here on the daily chart and the other on the intraday. And the intraday I really talked about in our chat room today as well. So a little background, let's set the stage, because I'm talking about a big negative day, and it came in this morning for the room saying that the market looked heavy. And indeed, a red bar, big volume, is heavy. I don't want you to mistake that for anything different. But I do want you to understand that when you get a big wide range bar, there is, especially if you look inside the bar, oftentimes a very likely scenario to get exactly what we got the next day, which is almost a complete reversal, in many cases a total reversal and then some. Now the times you're likely to have that is when you've got a major trend and you're at major support. I'm not going to get into the major support part of it in this video, but I will in future videos, and I have in past videos. However, the time it is also likely to happen is when your red bar takes out a significant portion of the range. Now, what's the range? If we look at the Dow here, the Dow has a very well-defined range. The day before yesterday, we basically traveled the entire range. And what does that mean? It means we pretty much demonstrated that there was not a whole lot of support throughout that range. Now we're going to go to the inside the bar to see how that actually looks, but at first blush, that big bar demonstrated that there wasn't a lot of support. So again, not a topic for this video, but the low of that bar and the break of whatever that support is becomes very important. If you break down, you do have all the weight and the demonstration that there weren't a lot of buyers up there. There wasn't a lot of support, and that is where you get the scenario where the big red volume bar is extremely bearish and heavy on the markets. So why then would you come in to this trading day thinking if it goes higher, I have to let it go higher. I don't want to be too aggressive on the short side until I get a signal that's indicating that the market's rolling over. And as an opening range trader, that's pretty easy to distinguish. All right. So basically, quick recap from a daily perspective: we've got a strong trend. We're in a range. We have a really big range bar that takes up the whole range. And when we come in the next morning, this is where I want you to start off. You have to be open-minded. Because if you think about it from the perspective of the swing trader sees the bottom of the range as an opportunity, not necessarily as a threat. If I can be a swing trader and buy the low of this range with a risk below this low and a reward scenario of the top of the range at first target and then some if it breaks out, that's a great swing trade setup. So that's why the swing trader sees this as an opportunity, and oftentimes too many traders see it as a threat. It becomes a threat when it breaks. So let's look inside the bar and see if we've got a situation where the opportunity is more obvious. But actually, before we do that, I want to point out, just before you're focused on what actually happened inside the bar, let me tell you what I'm looking for. And that is, if yesterday, if the big red bar is a bar that is persistent, down, backfill, up, down, backfill, up, down, backfill, up, down, backfill, looks like that, that's a much tougher bar to recover from. Okay, and this again might seem a little counterintuitive. If the bar actually, here's the open, started up here, and then just fell off a cliff, whether it happened in the morning, midday, or in the afternoon, but didn't spend a lot of time going from top to bottom, just literally falls off a cliff, and this happens oftentimes late day, this is a much easier bar to recover from. So let's take a look at what happens. And I hope, when we see this, you'll say, yeah, that makes sense. I get it. Alright, so here's my 5-minute chart, and I'm going to show you the big red bar day is this day here, and this is the next day. Alright, so just a quick note of what you're seeing on the screen. The red dotted line here is the 30-minute opening range low. Green line, 30-minute opening range high. The yellow line here is the floor trader pivot, right? That's going to be a key level. In fact, I came into the day saying I'd like to see an opening range roll over at or below the floor trader pivot. That would have been a perfect scenario for looking for the market to fail. When it didn't happen, I basically put things on pause in terms of the short side of things, and had to take the approach that, okay, this market could continue to rally. I don't know where it's going to go, but I got to be careful on the shorts here. Okay, so that's the down day. Here's your vacuum. Okay, so you've got a vacuum, right? So I'm going to expect coming into the day that if the market gets up into this vacuum area, there's not a lot of resistance, and we could see it move pretty quickly from this breakout up to this resistance. Okay, now it didn't quite get there, but you can see, where did we establish our opening range high? Right at that resistance. So it kind of ran up pretty easily. Volatile, but ran up pretty easily to that resistance level. And if we look at the resistance from the prior day, had some trouble about halfway through it, but once it got through that level, again, it just started eating through. Alright, so again, the pivot is key. Once you get through the pivot number, you've got, at least in our situation, half of a bullish bias, depending on the pivot stack. Then you get through the opening range, you've got more of a bullish bias. You have the vacuum here that suggests you could make some progress, and then once you see you test that level and start rallying, make a new high for the day. I would have expected a little more pause at that level, but that really indicated the strength of the move, and really it gets back to, alright, this is why I started with the daily, it gets back to the fact that this big down move the day before really cleans out the range oftentimes. So you shouldn't be surprised that it's getting and just moving up without any real resistance, because it moved down, had some support here, right, but gapped up, no support, found some support, no support, waffled around, no support. Okay, it really didn't demonstrate a whole lot of support the day before. So on the daily, this looks terrible. On the intraday, you can see how it could easily work its way up, and when you know the key reference points and pay attention to your key reference points, it helps you see the stairs stepping up. Granted, And you may recall from the conversation in the room, I wasn't looking, I was looking for the market to roll over opening range failure. Literally, this is my level in here. We came right down to it. Probably would have taken some kind of a short, but I really want to see IWM short, and that never even suggested anything, just powered higher. Another quick example of this scenario, and a rather extraordinary one, Apple. But let's take a look at the daily first. All right, incredibly threatening. I still would maintain that there's a really good chance that we've seen at least temporarily a blow off top here. I don't necessarily want to pick the tops, but take the same lesson I just went through and apply it here. First of all, opens lower after the big down move. Now, in the big down move, what are you going to look for? You're going to see how it really happened. Once you move lower, you're going to use the prior low as a really key level for resistance, and emotionally, whether or not it moves higher. So I'm not suggesting that you should be buying every big red bar. Okay, I'm suggesting that breaking below this level suggests breaking below the low of the big red bar suggests it could go lower. In this case, Apple does it kind of right on the open and then some, but then holds at a key support level. The market is strong, as we just saw on this day, and as it starts moving up, this is where I want you to be thinking, okay, even though it's got this huge negative bar, whether I want to go long or not, I should probably be careful about my shorts, and let's take a look at the inside the bar to see what levels are key. All right, I actually said in the room I went short at one point. Here's Apple. Okay, I went short through the rollover at the opening range high, and then when it missed my first target to take some profits by 20 cents, I scratched it. There's VWAP in here that we don't see in this particular chart. I scratched it because of what I'm talking about here. Here's the big down bar, right? We've got a vacuum here, not a lot of support, and then pretty much just hammered down for the rest of the day. Here's the low of the day. So market comes down, holds that key level of support, also happens to be S1, right? It's a 10-day moving average. Tries to rally, and as it rolls over, I'm looking short, right, based on the big red bar. But when it can't move lower, starts to move higher, and then actually takes out its opening range high, I totally reversed my position, stated it in the room as we broke out through the opening range to watch Apple. It could pop to the upside. Now the reason for that was this. We had some room to the prior day's low. So I fully expected we could get up to the prior day's low. And then if we took out the prior day's low, the next level was up around the 502 level. All right, so there's pretty good room to quote unquote pop. After that, I would have expected floor trader pivot, and while I would not have expected it, I wouldn't have been surprised if it continued to move higher to reach this objective. All right, now I hope that helps in terms of looking at the big red bars a little differently and looking for those pockets in intraday price action to identify areas where the market could do what would normally be considered counterintuitive.